Recently, Wall Street was engulfed in a tremendous selling frenzy. The equities market was on the receiving end from several negative signs. Electric vehicle-related equities suffered a drop in value as more speculative stocks came under examination in early 2022. In the coming months, investors are concerned that these current high-flyers would be subjected to continuous downward pressure as increasing interest rates result in shrinking margins for risky technology equities. Investors began to doubt their engagement in higher-risk speculative names. For Rivian, this did not turn out well, especially since there were a succession of unfavorable stories about them, which caused their stock to fall. What news weighed out against the American automaker? Moreover, is the stock still a good investment or not? Watch till the end to know the answers to these questions. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in our upcoming videos. During a sell-off that included other electric car manufacturers, Rivian Automotive's shares momentarily fell below its IPO price, indicating that the competition for market share is becoming more intense and legacy businesses are ramping up their own manufacturing. The company's share price plummeted to $75.13, a level not seen since its IPO in November at a price of $78. The stock recovered some of its losses and closed the day minus approximately 3%. The question that many people have is why there were losses in the case of the American startup. Recently, the stock market was being directly influenced by the federal government raising interest rates. Apart from Rivian, other electric vehicle manufacturers such as Tesla, Lordstown Motor, and Fisker all saw their stock prices fall between 2.1% and 3.3% as high-flying growth stocks were pressured by preconceptions that the Federal Reserve will raise interest rates sooner than previously anticipated. Rivian's steep decline, on the other hand, could not be explained only by this factor. A series of events occurred that contributed to the stock's further decline. Let's take a look at each of them. Immediately after its multi-billion-dollar initial public offering last year, the EV startup attracted a great deal of attention. According to many analysts and investors, Rivian's relationship with Amazon, under which the company will provide Amazon with 100,000 electric delivery trucks, was a critical component of the company's development strategy. However, it has been revealed that Rivian is not the only company that'll be producing electric vehicle for the Bezos business. After Amazon revealed that it had partnered with automaker Stellantis for its electric van delivery service, the shares of Rivian fell by around 14%. This implies that the two businesses will work together to produce automobiles and trucks that'll run on Amazon software, as well as to deploy electric vans manufactured by Stellantis on Amazon's delivery network. Rivian obtained a deal with Amazon in 2019 for the production of 100,000 electric delivery trucks by 2025. However, the electric commercial vehicle industry, which is a critical sector for EV pickup truck manufacturers, is getting more competitive. So, how will Amazon's handling of Stellantis affect Rivian's business? And should you purchase its stock in 2022 or wait until later? Let's talk about it in some detail. Electric delivery cars are being used by Amazon as a means of reducing emissions in its last-mile delivery operations. Clearly, the e-commerce giant does not want to be dependent on just one electric automaker for the same thing. For Amazon's last-mile activities, Stellantis has been delivering light commercial cars since 2018. In addition to working with Rivian for the delivery of electric vans, it makes sense for Amazon to continue its electric vehicle needs from the same provider, Stellantis, which has previously been providing them with delivery vans. The company also introduced a new version of their Ram ProMaster in 2023. Amazon's requirements were taken into consideration when Stellantis created the new electric Ram ProMaster. It has not yet been determined or stated how many BEV ProMasters will be ordered, but the firms claim that they will put thousands of them on the road each year. In fact, rising competition is detrimental to Rivian's business operations. However, Amazon's deal with Stellantis has not increased competition. What it really did was serve as a reminder to investors of the already existing competition. Investors were flocking to Rivian shares as if there were no competitors in the market. Because of Amazon's connection with Stellantis, they've been reminded that Rivian is not an island unto itself. Electric pickup trucks, SUVs, and delivery vans aren't the only vehicles available from the firm, though. Likewise, Amazon isn't the only company that uses Rivian services. For the time being, Amazon seems to be Rivian's sole client in the commercial vehicle category. At least, the business hasn't disclosed a new customer in this space. It's important to remember that this isn't always the case. It is still capable of delivering automobiles to other business clients. Perhaps, Amazon's agreement with Stellantis is unlikely to have a significant influence on Rivian's operations. There's no conflict of interest between the EV startup and Amazon, at least for now. In light of the cooperation with Stellantis, it does not seem that there is a significant cause for Rivian investors to be alarmed. However, they should keep in mind that the established manufacturer is gaining ground in the EV truck segment in which Rivian competes. The business is up against intense rivalry in the pickup truck and SUV markets, just as it is in the commercial vehicle industry. Ford has received a record number of orders for its forthcoming F-150 Lightning pickup truck. Other automakers, such as General Motors, are preparing to introduce electric pickup trucks in the near future as well. As a result, Rivian may find itself up against some intense competition in this sector. The EV startups are lacking particularly because the established car maker has been able to meet their target for the number of units delivered by the end of the calendar year. That is one of the primary advantages that companies like Rivian do not have, as shown by the fact that they produced fewer units than they had hoped for last year, falling a few hundred shy of their objective. When you're manufacturing hundreds of thousands of units, a few hundred units may not seem like a huge concern. But when your objective is just 1,200 units, it accounts for 70% of your total overestimation, which is significant overestimation. Lastly, the Wall Street Journal reported that Rivian's COO Rod Copes left the automaker last month as the company was in position of ramping up production. Despite this negative clout around the startup, Rivian has received over 1,000 pre-orders for their R1 pickup trucks and SUVs. If the trim has a favorable reaction from its early clients and manages to deliver the cars on time, it may experience a rise in the number of orders it receives. But it is becoming more difficult for investors to hold on to tech firms with long-term profit prospects. With high valuations and unclear future profitability, electric vehicle stocks are considered riskier investments as interest rates climb. Investors are selling their holdings in those once hot stocks and putting their money into more stable corporations with expanding profitability. Regardless of the fact that Rivian produces the world's first electric pickup trucks, the company still faces major risks as a result of strong competition from both established companies and new startups in the industry. Investors considering buying Rivian shares must decide whether to wait for a more favorable entry opportunity or whether to hold out hope that the company's future development would justify its current stock market value. At the time, that does not seem to be the case, but this might change as the year 2022 passes further. Lucid, like Rivian, had established a unit target goal for the year 2021, but the number of units delivered has not been disclosed. Leon believes that the manufacturing should have surpassed expectations, but that software issues are preventing them from being able to brag about it. That should wrap things up for today. Keep in mind that subscribing is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.